Couple of must-read opinion pages in the New York Times. Columnist Nick Kristof writes about his manifesto for despairing Democrats, offering a blueprint for, quote, how ordinary Americans of my ilk can respond. And he writes, I accept Donald Trump's victory. I will be a watchdog, not a lapdog. I will try to understand why so many Americans disagree with me. I will keep my cool. I will care for my mental health. I will push for blue places to govern themselves better. I will temper my strong views with humility. I will share Thanksgiving with relatives, even if I think they're nuts. And instead of despairing, I will find purpose. Also in the New York Times, Maureen Dowd has a piece entitled All the Demons Are Here, in which she writes, Trump has exploited the widespread disillusionment that has curdled into cynicism about a ruling class rife with hypocrisy, self-aggrandizement, and bad judgment. Americans have felt let down again and again since the 60s, with wars we shouldn't have been in, occupations we shouldn't have had, the bank scandals that were allowed to happen, trade agreements that hollowed out manufacturing hubs. Then there was the devouring pandemic. Many Americans felt left behind, fooled by Republicans and disdained by Democrats. All the dislocation was exacerbated by social media algorithms, igniting anger, outrage, resentment, conspiracies, and fake stories. Donald Trump is a human algorithm, always ratcheting up antagonism. He's a personification and exploiter of all things creating anxiety in people's lives.
From Maureen Dowd. Meanwhile, the stock market continues to see record highs since the election of Donald Trump. All three major indexes up yesterday. Dow Jones climbing more than 1,500 points. Futures continue to rise this morning. Let's bring in the co-anchor of CNBC's Squawk Box and a New York Times columnist, Andrew Ross Sorkin. So, Andrew, it looks like the markets continue to like the election of Donald Trump.
Yes, but, and I think there's an important but here. So I think that if you are on Wall Street, you think you like this to some degree. I think if you're a CEO of a corporation today, you are both trying to be optimistic but also a little bit anxious. But here's the thing to watch. The bond market. We mentioned it yesterday, and I said there was an opportunity potentially that the bond market is the governor on whatever happens in politics, especially if you think there really is a red wave and the House goes red. And I want to read you. This is Barron's yesterday, but I think it's important. The bond market is sending a warning in the wake of Donald Trump's election victory on Tuesday. Investors may have been looking ahead to lower interest rates now that the Federal Reserve has started cutting. No more. The new message yields are sending. We're heading back for a higher for longer world of interest rates. The question is just how high. And you've already started to see what's called the 10-year note move higher. That is the benchmark for which we're going to have our mortgage rates. Mortgage rates are higher. We talked about the prospect of higher interest rates in this country and higher inflation. Effectively, that's what this is really about, higher inflation. And this is a major component part of that. And so I think while we can look at the stock market, and that is a signal of optimism, I don't want to discount that at all. There's this other side of the market that's saying, watch out, this may become a little bit more complicated.
For the layman, Andrew, the bond market is important. Why?
The bond market is important because these are the folks who effectively are lending the U.S., all of us, money, right? And we are saying, those folks are saying, we're going to lend you money at X rate because we think you can pay it back. The day we think that you can't pay it back, we'll continue to lend you money, but we're going to charge you more for that. Which means you're going to get less on the other end. And those rates set our mortgage rates, they set our credit card rates and the like. So if we think that there's going to be inflation, that is a problem. And we've talked about the potential of the tariffs and everything else, and whether the other side of the deregulatory efforts that President-elect Trump says he's going to put in place, will that offset inflation? Maybe, maybe not. I think the bond market is saying maybe not.
So the Fed's going to cut rates today.
Today.
So that's coming.
That is coming. A quarter point likely today, 2 p.m.
But you're suggesting here is that going forward, that's less of a sure thing because of the unknown implications of what Trump's going to bring. Because as we've all learned from you over the years, the one thing the markets don't like is uncertainty. He's bringing uncertainty. He's bringing uncertainty, but I think even more than that, there's just the question of, look, if you have lower taxes for longer, he wants to put that tax package from 17 and make that permanent. That may have an inflationary effect. He also
will be adding some other giveaways on the tax program. That could also have an inflationary effect. The tariffs could have all of those things. Make it more complicated. So it's so interesting that you have this dynamic where the stock market is moving higher and the bond market is saying, I'm a little anxious.
So as predicted, CEOs falling over themselves to congratulate publicly Donald Trump on his election. But some of them actually may be going on to work in the administration. Do we have a sense for who among those are close enough to Donald Trump that they may actually
Well, look, there's a whole list. Actually, we wrote about him in DealBook today. John Paulson, who's been outspoken about Trump, has been named among those that could be a Treasury Secretary. Jay Clayton, who used to run the SEC, who's now the executive chair of Apollo Group, which is one of the biggest private equity firms in the country. It may be in a position for a major role in the administration. I mean, the list goes on. Kevin Warsh, who used to be at the Fed. Somebody who's in there, Gary Cohn, if you remember, who ran the NEC. His name is now being bandied about. Howard Lutnick, who is running from Cantor Fitzgerald. You've had him on the broadcast over the years.
Linda McMahon.
Yeah. So there's a whole cadre that are looking for roles. I will just make one comment because I think there's been a lot of criticism of the CEOs yesterday who were congratulating the president or the president-elect on Twitter, saying, why are these CEOs doing that? Are they trying to curry favor with him or whatnot? It is true, just for context, that, pre-social media, if you were a Fortune 500 CEO in America, when the president, no matter who they were elected, you wrote them a letter and you congratulated them. This is sort of the new version of that, but now everybody's sort of reading into it 100 different things. Is Jeff Bezos trying to curry favor because of this or that, and so on and so on? I don't subscribe to that theory, but I saw enough of it on Twitter yesterday to try to talk about it here.
His biggest CEO supporter, of course, is Elon Musk. There's speculation that he would get some sort of government role. But what would that?
It's very unclear.
What would that really mean, though? Like, what sort of clearances would he need to have? Would he have to give up things? Like, walk us through that
process.
First
of all, on a security clearance basis, he probably has more security clearance than just about
contracts he already
because
has.
of the contracts he already has. It is unclear whether whatever role it is going to be more of an advisory, almost informal style role, or something that's genuinely formal. If it were formal, he would have to give up his roles at these other places. That's something I cannot imagine he's up for, and I don't think is really in the cards. I think he's going to try to play a role in reducing government costs. Again, though, what's complicated about that is between Social Security, Medicare, like there's certain things you can't touch, and then the question is how much can you really do? He's talking about $2 trillion of cuts to the government. That's a huge number. I was talking to Stephen Mnuchin, former Treasury Secretary, about that this morning. He said $2 trillion is a lot of money. Is that on an annual basis or is that on a over time basis? And I don't know. If there's somebody who can do it, it's him. But again, part of the issue for our economy is going to be, do you do this with a scalpel very, very carefully, meticulously, or do you do it with blunt force? Because if you do it with blunt force, it can have a real impact on the economy, and of course will have the impact on so many lives of folks and jobs, folks who've given their careers over, frankly, to the U.S. government too. So I think there's a lot to think about.
CNBC's Andrew Ross Sorkin, thank you very much as always. And